had S&P assign a B+ long-term senior unsecured debt rating to this $500 million bond to be issued by the Republic of Senegal. What have you made of the Republic's decision to go down this route, considering that it's only one of 4 sub-Saharan African countries to do this so far?
Thank you. There's an increased interest from the investor community today for African sovereign risk. Clearly, the community of investors internationally is getting more familiar and more acquainted with the African risk in general. Senegal is one of the attractive names out there at B+ level, and we have worked with the country very closely in order not only to improve their outlook, because as you know, Moody's has also been in the country and confirmed that B1, B+ rating, but with a better outlook, but also to work with them in terms of contacting investors, putting their story out there and making sure that they get the best reception on the bond issue.
Do you think international investors are becoming more discerning when looking at African economies? Because there was a stage where, you know, once you heard a story about Cote d'Ivoire defaulting on the one end, it had a ripple effect no matter what the macroeconomic scenario was in another country like Senegal.
Investors are getting more and more sophisticated and knowledgeable about African risk. They know how to make a difference between the Senegal, Cote d'Ivoire, Kenya, Ghana, etc. They know the stories, they go into the countries, they meet with the issuers, and they always looking forward to have issuers coming towards them in the US, in Europe, and telling the stories and hearing from the issuers directly. So I think we have gone past that point where Africa was seen basically as one big risk. I think they look at countries on a single particular basis as opposed to lumping them up all under the same caption.
Of course, to an extent, this will be illustrated in the kind of interest this bond in particular has received. So let's take a look at investors' attention and how you're rating the success of this bond.
This is a bond that has been 5 times oversubscribed. The book was at $2.4 billion when the bond issue size was $500 million. The investors were coming from all different segments, asset managers being a big chunk of them, about 90%. But if you look at the geographic diversification of the investor base, for the first time we've seen account coming from the US, from Asia, from Middle East, etc. That's not usually the case. The breakdown on this trade was about 1/3 from the UK, 1/3 from the US, and the rest from all over the place, including, as I said, Asia and Middle East for the first time.
Big question is what's changed, because Senegal's 2009 bond was not deemed as successful as the current issue.
The bond happened at a pretty bad time. It was just around Christmas. It was just when the Middle East Dubai crisis started. It was a Reg S format only. We needed a Reg S 144A that would be open to the public or the investors in the US. This new bond in 2011 has corrected all of that, and the other successful part of the transaction is the exchange that has been able to completely redeem the existing bond, the 2009 one, for the new one, therefore repriced completely the Senegal risk internationally.
So let's take a look at what benefit the sovereign bond brings to an economy like Senegal. Already, many of the international houses and community very optimistic about growth potential this economy boasts. So we're forecasting growth in the region of 5% in Senegal this year.
Correct, and I think this bond helps foster that growth in the sense that it is going to be used for infrastructure development, and those are infrastructure that in themselves carry a lot of growth potential. And Standard Chartered is obviously extremely pleased to be associated with that project from Senegal, as well as similar projects from other countries. We have been on the continent for almost 150 years now, and we have presence in 14 countries in Africa with about 7,000 staff. Therefore, we are particularly well equipped to accompany countries like Senegal in their ventures in the international capital markets and make success of those ventures across the continent.
On a comparative basis and against an African peer, I mean, we had Nigeria issue its own sovereign bond, but Senegal's pricing was certainly higher. How do the two bonds compare in your books?
The Nigeria rating is similar to the Senegal one, at least when you look at the S&P B+. The differences are in terms of sizes of economy. Nigeria is about 16 times the size of Senegal in terms of GDP. In terms of format, we had a situation in Senegal where the initial bond, the existing bond, was a format that's not optimal, which is Reg S. Therefore, it has to be redeemed. which was not the case in Nigeria. So those are elements that explain the differential in terms of rate that we see between Nigeria and Senegal.